Good morning, everyone, and welcome to today's webinar, where we'll cover the financial announcement for Fobi's first quarter, fiscal 2023. I'm your host, Ian Cameron, and I'm joined today by Fobi CEO Rob Anson and our CFO, Annie Chan. First, Annie will take us through a few slides to go over the highlights of the financial results, and then Rob will make some remarks. And finally, we will finish up with some pre-submitted questions. So Annie, take it away.
Great. Thank you, Ian. Welcome to Fobi's financial update, and thank you for calling in. I want to start with a timeline to summarize what we've accomplished, where we are today, where we're headed, and how that ties in with current revenue and future revenue. Fobi largely began in 2019 when it completed a reverse takeover with Loop Insights. 2020 was spent on R&D activities, and in 2021, we started acquiring companies. Passcreator, our European digital wallet company, became our first substantial acquisition. We spent the rest of the year integrating Passcreator, and in September 2021, we had our next substantial purchase, Qpos, a coupon management platform. With the newly acquired assets, we were kept very busy integrating our assets, building out a roadmap, finding ways to cross-sell, all in an effort to commercialize and monetize. We achieved commercialization in fiscal 2022 and reported over $2 million in revenue, which is great considering we only started in 2019, and it really validates the R&D activities that we did until now. We are now focused on growing recurring revenue, and approximately 75% of our revenue is of a recurring nature. The revenue we have today is our baseline. We have a low churn rate, and we expect revenue to only increase from here. Previously, the company did have a large team of engineers. We needed the expertise in-house to integrate the assets acquired. Since integration is largely complete, we have been able to scale back in headcount and engineering so that we can shift our focus towards sales and marketing. Going forward, we are going to continue to focus on growing recurring revenue. There are some new revenue channels that we expect to monetize soon, including the launch of 8112, our newly introduced affiliate program, and Fobi Data Exchange, to name a few. And with the public listing, we are in a great position to continue to strategically acquire other assets that may be complementary to our suite of products and repeat the cycle of integration and commercialization. I can't emphasize enough that we are very focused on driving recurring revenue. There will, however, always be a non-recurring revenue component, given the nature of our business, often includes setup, training, consulting, but we are focused on driving recurring revenue. So unless the non-recurring revenue is complementary to driving recurring, or if it's low-hanging fruit with great margin, we are going to focus our energy towards driving recurring revenue. In this next slide, please, Ian, is a quantitative view of what we just discussed. As you can see here, we really began in 2019, did R&D. We acquired some companies over the next couple of years, integrated it, and reached commercialization in 2022 with a baseline revenue of $2 million. For the 3 months ended September 2022, we earned revenue of $532,000. The same period last year was $580,000. I do want to point out that the revenue last year includes a one-time revenue of $250,000 from one customer. If we were to remove that one-time revenue, the amount is $330,000. So we did see a lift on a year-over-year basis. You probably see from our news releases that we have a lot of announcement on new partnership, new contracts, etc. A lot of these partnerships are 1 year or multi-year. Any revenue that will be earned from them would be amortized over the service that's being provided. So we'll see some of that revenue in future periods. The company incurred operating expenditures of $3.2 million for the 3 months ended. Again, I want to emphasize that this includes non-cash items, namely amortization and share-based compensation. If we're to strip it out, the actual cash OpEx is only $2.2 million. As a refresher, the carrying value of the assets acquired are amortized over a 3 to 5 year period. This is required by IFRS, which is the accounting standards that we need to adhere to. This is not indicative of the assets being impaired, but rather it's IFRS way to take a conservative stance. Similarly, share-based compensation relates to the Black-Scholes fair value of the options that are granted to employees. As mentioned earlier, since we completed our integration, we have been able to scale back our headcount and consequently less options are vested, which is also why you see a decrease in share-based compensation. So looking only at the cash OpEx, we have about 2.25 million. On initial glance, it seems like it's relatively flat to last year. However, if you look at the P&L, the financial statements, you will see that, essentially pretty much every single line item that's on a cash basis has gone down. The only two exceptions are professional fees and wages. Professional fees includes the amount we pay our lawyers, our auditors, and as some of you probably know, lawyers and auditors are generally very behind in sending their invoice to their clients. And while we do make accruals on the amounts along the way, so that we can smooth out our expenses, we don't always know what the actual is going to be until we receive the invoice, which is why there's some volatility on a quarter-over-quarter basis. With wages, there was a slight increase, and the reason why it increases, in the same period last year, we didn't have QPO salaries. When we acquired QPOs, we were fortunate enough to also take on the talent that came with it, which is why you see a slight increase in salary this year, because it did include the wages of QPOs. So that's like an overall snapshot of our revenue expenses. Ian, I'll pass it back to you.
Great, thanks, Annie. Rob, I'll turn it over to you for your comments.
Yeah, just to add to that, I think for us, the snapshot, it's always difficult because we're always reporting in, as we talk about as a data company, it's not true real time. It's on what's happened. It's historical data at this point. I think one of the key things that for us, when I look at Annie's slides there, is for an early stage company, we're not selling widgets, we're selling future technology innovation. And the R&D element played a big part, of course, the acquisitions, the integrations, these things that we've gone through, the heavy lifting here. I think that's the thing that I would note, of course, of most importance, that the heavy lifting is done. We're able to move very quickly now, and so many different verticals and paths. We're going long and narrow in others, in I don't want to say healthcare, but insurance, as we've seen here with our various announcements and multi-year revenue contracts. The company's in a very solid position now. Our products and technologies are extremely relevant in today's day and age, and we're sitting on the preface of a major historical launch in the CPG world with 8112. I think this is what our shareholders, why they're here and why they've been patient, is it's where the world's heading. It's not where it is today. So a lot of this is education of environment and markets, and of course, and I think it's, as we see here now, with the continued growth of the company, the reduction of cost and burn, the heavy lifting has been done. And for us, this is where we're extremely well positioned for growth of next year.
All right, thanks, Rob. Now we'll go over some of the pre-submitted questions. So thank you to all the investors who sent in your questions for Rob and Annie. Rob, first question is for you. It appears the company has a solid base of paying customers, and looking at the current assets and models, where do you see the biggest upside in 2023 for Fobi?
It's a good question. I think part of that, Ian, is what, just to reiterate what Annie said, is that it's validation now. We're not just selling a story. the technology, the R&D that we have done, it is validated now with multi-year contracts, and that's a very key component here. I think if you look to the technologies, Ian, I mean, I'm sitting here in Las Vegas, been attending the AWS reInvent conference, and on my way down here, I was looking at my old files from 2017 when we were a private company, and my sort of roadmap and puzzle that I was building and executing on. And the realization of some of these things now, the Fobi Data Exchange, that was my goal. That was the reason for the Fobi IoT device. Everything was built around data and the story of data, the interoperability, value proposition, but the monetization piece. Everything we've done today does not even realize that or reflect that. So that's why I'm extremely bullish and confident in next year, is that infrastructure is in place, that infrastructure is live and working in environment, and we're growing our user base on all levels. Where do I see the biggest growth next year? I think healthcare plays a big part of our roadmap, is many of the projects that we're currently working on and focused on. I think as we see down here, the mobilization and extension of web and mobile app is where we fit in with the wallet technology, which we've acquired through Pass Creator and Pass Wallet and others that we're closing out. The significance of digital identity from a government perspective, we're extremely well positioned here, and it's, we've lost a lot of great people, I would say, down this path of consolidating the company towards more sales and marketing. But the efforts that those previous employees have done and built from engineering perspective are truly appreciated, of course, but will be greatly recognized in 2023.
Absolutely. And that's a great segue to the next question. You brought up the Fobi Data Exchange, or FDX, as we call it. One of the questions was, recent press releases have been referring to a kind of a common theme, which is, the FDX. Can you explain what FDX is and what the significance of it is to Fobi?
It's to me, it was always my key. It was the goal. And when we start to look at the world of data, it's, for me, I think, Ian, too, part of it is the validation of peers and all the meetings I've had down here and introductions to whether it was VC or AWS partners and whatnot. The story of interoperability, real-time data is the preface for everything. And that infrastructure there for us enables users to access the data, build audiences, and more importantly, unlock the world of data. That's, to me, the significance of what we've built is I have all the data now. What do I do with it? I was focused on creating personalization, segmentation, all of these things that we provide to our partners with Lightspeed, Square, Shopify, etc., is always about segmentation of data. That is the biggest challenge for most organizations that we hear. And the monetization piece comes in form of annual license, subscription, revenue share models. So this is where, for me, this is becoming fun, because this was everything that I've wanted to build. It stems from the world of data and be able to unlock, leverage, and monetize as we market and sell our solutions today.
No, absolutely. And again, for me, that was one of the key reasons why I actually joined Fobi. So I'm glad to hear you extrapolate on that. Next question, actually sort of the flip side of the first question. What do you see as the biggest risk for Fobi in 2023?
The biggest risk? Well, the last 2 years, it's been human capital, of course, being able to expedite that. I think there's certain variables that we simply don't control, of course. Broader markets, capital markets, of course, have been very volatile and challenging. For us, we've been very focused on what we can control, and that's the development and progression of the product. We've put great efforts this last year, going back to January, in webinars, and I think for us, the marketing and education around product is a big part. We're seeing a big shift in realization now to all of the benefits and agility and value proposition of which the wallet delivers. And there's just to me, it's kind of a convergence of where the world is headed and how fast it moves. I don't see, quite honestly, a lot of risk for us in 2023 because we've addressed these in past years, forward thinking and looking. When it comes to inventory and chip management and these things, human capital, we're in a position now to consolidate a lot of these various verticals, and the accretive acquisitions will play a big part of that.
Okay, great. Well, that's actually another good segue. Next question is around verticals, and we had a question saying, "Hi, Rob, new investor, and I have been looking at all of the various verticals where Fobi is relevant. I listened to the TELUS podcast, so can you speak to what a smart city is and where Fobi fits in?"
Well, smart city is a term that's been thrown around for several years now. I mean, I've been asked over the last 3-4 years to listen in and take part in various discussions globally with some of the largest telecom companies today. And they've all failed for one reason. Smart city has no means to monetization and really no ROI for government to invest into. Not to speak on behalf of TELUS, of course, and Dan Klingerman and their smart city team, but they've come at it from the right approach to me. It's driven through private sector. It's driven through partners like us that are solving first world problems. It's building infrastructure, it's building network, it's building connectivity. That to me is where I see the TELUS model being very successful, and it helps scale for us, obviously, through procurement and channel, leveraging all of the assets of the TELUS team.
Okay, that's great. And we've got another vertical sort of focus question here. On the last shareholder call, you mentioned healthcare as a focus, and you mentioned it again today. Can you explain where Fobi would play a role in healthcare?
Sure. This is one of the big benefits of our Alt ID platform, as we call it. When we live in a world of data security and privacy, it always puzzles me for anyone that uses our healthcare in Canada. I walk into a hospital, I swipe my services card, then I have to validate who I am by giving my first and middle and last name. I have to then give my address and my doctor and why I'm here and all of these important pieces of, to me, PII data. And when we look at how we can leverage this, much like we do for the NASDAQ, for example, is it's a verification of who you are, much like conferences, Ian, and down here. What do I have to do here? I have to wait for an hour and a half to register myself to attend this event. By taking a photo of a government ID and uploading that into our wallet, and then having that verified on the back end by Fobi, it provides automation and access to entry. And the accreditation of which the wallet provides now provides this seamless, secure environment, if you will, that I simply tap or scan in. My information is validated, it's cross-referenced in the back end, and I'm not having to share anything in a public forum. The ownership and utilization of data of which the Alt ID platform, whether it's age verification, of course, or appointment or ticketing for the Oscars, of these various different use case and deployments of which we've built, it all stems around data ownership and how data is utilized. And as I said earlier, the activation of data. And this is where we're well positioned. And this is why, going back to the smart city, this interconnectivity, if you will, amongst businesses and systems and networks. Digital identity is something that, of course, federal government has been pushing over the last couple of years. It's about access, it's about security, and these agendas here aren't going away. They're all about utilization of data. And this is a big part of where we are, why I positioned us in these environments. And it's a big part of 2023 and in many years to come.
Yeah, absolutely. Connecting those data silos. One more question around verticals. This is sports and entertainment related. Question is, so FanMaker appears to be a great up and coming company. How did this deal come about, and where do you see the first win coming from?
Well, I would say FanMaker's had a very good story. Obviously, and you hosted a podcast with Jonathan. They've got a great model, and they're a very agile technology stack, much like we are. And it came from one of their customers. That's the benefit of being a data intelligence company at heart. But it's once again, it's the utilization of the wallet. Obviously, when you look at a ticketing perspective and you look at the loyalty and a fan base, season ticket holders and whatnot, sponsorship, it's the utility which we provide that extends value. Not everyone has their app. The goal is to create a total known visitor or fan in this case. And whether that's coming from their mobile app or the wallet, it fills the funnel and it checks a point, and it's extension of value of which it provides. And that's the biggest realization of which I think we've benefited from over the last 3 to 4 months. It's much like here, there's an app for the conference. It provides another utility and extension of web and mobile applications. The wallet is all about seamless, of course, onboarding and activation of data. And the personalization segmentation element is key. Understanding wallet share customer lifetime value for the sports and entertainment world is a big deficiency for most today. I can say that confidently. And that's where we can provide that connectivity and interoperability across all of their infrastructure, from parking and merchandising and food and beverage and sponsorship and all of this stuff. It's for us, puts us in a very strong position with one of the largest providers today. And it's to me, the agility of which Jonathan's built out for FanMaker that enables these API integrations to light up environments and provide a true seamless experience for the user, an extension of value to the teams.
Yeah, certainly loyalty is, where everything is moving right now, which is great. Sort of shifting gears here. Got a question, I think, on a lot of people's minds. We have seen a lot of sell-off in the last couple of weeks. In your opinion, what is the reason for this, and do you see this as the bottom or not?
Well, I don't know. I disagree with that to some degree, and people might think I'm crazy, but for those that truly understand, there's not a lot of selling here. This is a game of algorithms, and this is what we see and are fighting on a daily basis. There isn't a lot of selling. As we reported a couple of weeks back, we saw around 1.5 million warrants exercised that had a expiry at 35 cents, which of course is a great vote of confidence for those that invested in early stage private placements. As Annie alluded to, with the reduction of some of our senior management and other positions within the company in engineering, we had a great deal of options that were at a 90-day, of course, expiry, and those were exercised. I don't agree that we don't see a lot of sell-off. On the contrary, for me, I don't get a lot of people anymore that are irate. It is what it is. The markets, of course, have had a very difficult year in correction right across the board. It's not just obviously Fobi. And small cap is, of course, hit the hardest. I think that if you truly understand the markets and the way the stock is trading, this isn't shareholders throwing in the bag. We've got some, of course, that we've seen here in the last week or two. We're in tax loss season, which is, put some pressure on it for those that, obviously cash out and move along. And I don't begrudge any of that. I mean, it is what it is, Ian. And I've always been about that. People come and go here. I don't want to say I'm numb, but it's just it's the reality of the capital market world. And people come, people go, and much like the business, everyone's replaceable, of course, including myself. And we've constructed the business to just be that, truly plug and play from all facets. And the world of algorithms, this is a big challenge, and it's not shareholders just packing it in and scrambling and taking off to find something new. We've got a very, very strong, passionate shareholder base, a lot of very, very intelligent people, based on the hundreds of messages I get and questions I get asked on a daily basis through various channels of our IR and social media and LinkedIn, of course. A lot of very intelligent people that get it. This is a long-term investment. As I said earlier, we're not selling widgets. We're selling future technology, transformation, and innovation. This is a big part of long-term and growth company, is that realization. So we are truly just beginning. And as there will be a year-end sort of update, if you will, I think that plays a big part.
Right. And sort of related to that, I guess, this is a good sort of follow-on question to that. Question for you again, Rob. I invested into Fobi because of the Alt ID technology. This technology doesn't appear to be a current focus of the company. Why?
I'm not really sure why the question of focus. I'm not sure what that means. Alt ID is the whole premise of everything we built for that, and the verification. That's where it starts. So I'm a little puzzled by the question, perhaps, but I can assure you that it is the whole base of what we have built and what we are building and selling today, and being sold by our channel partners as well. So whoever had that question, I can assure you it's not a lack of focus. It is a huge part of 2023 and years to come as the core technology.
Yeah, and I can vouch for that from a marketing perspective, because we talk about it a lot. This next question, I think is actually a good one, and I like it because the question is, I'm really liking the new style of Fobi interviews, podcasts, and profile videos. Have you ended your contracts with Agoracom and Proactive? Will there be a year-end interview?
Yeah, we've obviously, as we've shifted from engineering mode to sales and marketing, we've found a very talented video and photographer, if you will, and Nathan, who's joined our team, came from Best Buy. And we're always looking to continually upgrade of what we do and go down different paths. No, we still do have relationships with Agoracom and Proactive, but we're putting a very concerted effort into creation and mobilization of what we do, not just through communications, of course, with the Investor Pass and others, but no, there'll be a great deal of more to come, of course, as Nathan's building out our roadmap, and we will continue to use some other third-party platforms in the time being, but we will be looking to build everything in-house for next year.
Absolutely.
Sorry, Ian, I think there was one more about, was it year-end?
Yeah, will there be a year-end interview?
Yeah, no. We'll be doing a recap, of course, as to the year in review. We will, I'm sure, use our other partners as well as do something in-house, as well as I'm sure a podcast, or I know that you guys have scheduled in. So there will be updates. And as I said, I'm always happy and I make myself available at all times to answer as many questions as I can. We'll carry on and continue to create that stream of open source, I guess, if you will, that for me, we do have a very passionate group here. And the recap of the year, I get asked quite a bit, am I upset about the way the status is and these sorts of things? And when you start to look back now, as I'm building that year-end review, we have accomplished a great deal. And I said, for us, I'm proud of what's done for those that are here today and those of the past that have moved on, that we've been able to now expand to more of sales and marketing and focus. And the future for us is very bright. I'm very proud of our team, of who's here now and where we're headed. Obviously, we've made a couple new hires for content creation and copyright, which will continue to help Nathan, of course, and your team, Ian, continue to build out great content.
Yeah, absolutely. And now kind of a sort of an interesting positive question, I think that's on a lot of people's minds. When will Fobi's addition to the S&P Venture Composite Index start to bring support and increased volume?
Yeah, they have, I believe it's 6 months. So I think in calendar Q1, January, February, March of next year, we'll start to see more. They're obviously out there chipping away today, some of the groups. I've had a lot of the index fund managers reach out to me looking for more information about the company and stuff. So there are eyeballs. We do see in the quote, particular groups that come in. There is 385,000 shares thrown up on the bid. Level 2 and these sorts of things, looking to get a bit of a discount, of course, and happy to take it where they can at these levels, of course. And I think for us, it's kind of another one of these sort of matrix moments that came to fruition based on my last trip down here. I think we continue to see that in like I said, calendar Q1, the enhanced volume, and volume's never really been a challenge for us, but I think we see the benefit from that calendar Q1 of next year.
Great. Next question, I think you've kind of answered it from a couple different angles, but I'm going to ask it anyways because I think it's important to address. Rob, are you happy with the company's progress to date?
It's a good question. I get asked that a lot. It's kind of the same thing. I don't get very excited about a lot of things. Especially when we had our technology award for the digital ticketing for the Oscars and stuff. And I have my eye on one prize. These, I guess, validation moments, if you want to call it that, by others and stuff are great. Don't get me wrong. That's to me more of a team high five and commendment on my behalf to their work, where I'm focused on one thing. And for me, I'm not, I don't want to say disappointed where we are, because it's been foundation, Ian. As I said earlier, I look back on my puzzle and roadmap, and we are executing as to where we were. I have a 5-year, very definitive and very sophisticated plan. We're in year 3 today. And for us, the heavy lift has been done. The ability now of which we have to make further acquisitions and integrate the tech stack and provide this true gateway interoperability, that's there. And for me, it's been great to witness the evolution. I think now when we start to see the realization of where the markets are at, and I don't mean capital markets, but the business development, it's the right time, right place. And I'm very happy that I did make the acquisitions when I did, because it's positioned us extremely well with the relevancy of our solutions for today's environment.
Yeah, it certainly has. Annie, actually, I'm going to go to you for this question. I think you've kind of talked around it a bit in the slides, but good question here. Has the company managed to reduce its costs as it has previously indicated?
The simple answer is yes. And I really wish we could report in EBITDA terms, but which would probably be a lot less confusing. And it's also the reason why we have the calls that we do, like today, so I can provide clarifications on our financials. There's a lot of noise on our financials because it includes a lot of non-cash items, which I spoke about. And because of that, it's not always easy to have good visibility as to, what the OPEX is and whether it's actually truly decreased. And, further to that, the non-cash items are often the largest amount on the P&L as well, too, which makes it more confusing. Which is why I had a slide earlier to show what the OPEX is on a cash basis compared to the OPEX on the P&L to show that, hey, we did decrease our expenditures. And, as a matter of fact, arguably, we shouldn't be decreasing because we have more entities. On a year-over-year basis, last year, we didn't have pupils. This year, we have pupils. And somehow, we managed to reduce our expenditures. Big part of that reason is that, we're just a lot more cognizant of our spending. As you know, Fobi didn't have a full-time CFO until I joined. And, we spent a lot of time, going through every single expenditure, and I'm still doing that. We're going at a very detailed level because, I want to make sure that our investor money is put in the right place, and we don't want to be any spending that shouldn't, we're looking at ROI for our products or a different line of business. And I'll continue to do that for Fobi, and that's my job.
I think, Annie, I would add to that too, though, is the ability for us to reduce and have some of this burn be expendable is a result of the way we've designed and architected our solutions through automation. This is why we're able to now scale and onboard extremely very quickly. That automation is the key to what we do, how we build all of our solutions now. That's what will enable us to further reduce burn rate as we go in certain components of the business and put the investment to more of the sales and marketing, which obviously leads to contracts and revenue.
Absolutely. So Rob, that actually leads to kind of an interesting question. This is, with Checkpoint starting to take off, what conferences are you attending in 2023?
That's a great question, I guess. Some of these things we look at are still up in the air again, is what we're planning. I'm not sure if this was meant for me personally, is the company or where we'll be exhibiting, but there'll be, as part of our year-end sort of review, kind of a roadmap as to where the focus will be of 2023 and where our efforts will be as far as attendance and marketing and these things. We've got a lot of great exposure of late, of course, a lot of visibility, as you saw with our introduction, I guess, to the IRG group and the magazine. That's opened a lot of doors for us. And some of these organic exposures to me are a lot more valuable than, spending money to be at various trade shows. There's so much of it, and where we look at these hybrid models, Ian. Some of that, I think, the WebEx, the roundtables, the fireside chats, there's a lot more exposure that we get from these things as opposed to being part of, you know, a million different vendors down here in Las Vegas. I think that the hybrid online models of focus are a great opportunity for us to continue. Of course, we play a part of that with the technology of which we've integrated with some of our partners. But I think for me, I see the opportunity of conferences more from a business development perspective than from an attendance value perspective.
Right. All right. Last question that we've got here. Rob, can you speak to some previous acquisitions that have been announced but have not been finalized yet, such as Passworks?
Yeah, obviously, I can't speak to all of it, other than that they're in final stages. I guess I could say that much. There's obviously is what we see internally, great crossover with very large clients that we're already working on, I guess you could say. So it's more so the formalities in. I've got a couple too, not to throw a wrench in here, that I've received from LinkedIn earlier this morning that were great questions. And I think there are important ones too that I'd like to add to this. That one of the questions was around trademarks and patents. The company has filed various patents and various trademarks for a lot of our technology, with Alt ID and Tap to Win in these various different product releases. It is a big part of our IP portfolio as well. That is a great question that I did receive this morning. That is, I think, an important one. So I wanted to throw that in here, that yes, we do have lawyers, of course, that handle all of the IP assets and holdings of which we've created here. As Annie alluded to, licensing will be a big part of our revenue growth of next year, and we're in a very strong position from that IP portfolio perspective.
Great. Well, that's all of the questions that we have for today. I will want to thank Rob, you and Annie for your time today. I want to thank all of the investors for sending in questions for today. So this is the end of the webinar. Please tune in again and join us on our next webinar, or listen to our podcasts. And you can find all of that on our website at fobi.ai/resources. Thank you.